Hello everyone, welcome to Global Online. Am I audible? Please give me confirmation so we can start today's session. Just let me know that my video, my slides is visible to you. My audio is okay. Okay, so am I audible? Just give me confirmation. So everything is okay. Yes, very nice. Let's start with the today's session. Yes, if you find any difficulty, so you must let me know. Okay, I will solve it. So let's start with the today's session, that is our Maha marathon session for those students who are preparing for the UGCNET June 2025 preparation. Okay, and this is whatever the common topics we have for the commerce and management. We are taking the common revision for both the subject, and this revision is covering all your syllabus. Along with that, today we are going to discuss the top 50 most important MCQs, okay, with a detailed explanation. Okay, this is our day 4. Let's start with the first question. So what is our first question? On issue of share, the application money should not be less than. Option number 1, 2.5% of the nominal value of share, 2.5% of issue price of share, 5% of the nominal value of share, and the 5% of issue price of share. So what will be the right answer for this question? What you have to do, just mark the whatever you think that is the right answer for you, and I will check it and I will give the explanation of that. So just try it with your own self to mark the answer. Okay, so first of all, let's understand this question is from the Company Act. Okay, which year? Company Act 2013. Okay, in the Companies Act 2013, the section in the section 39(2), in this particular section they give the details about the application money. Okay, so this question is from the Companies Act 2013, and this application is related to your issue of share. Okay, so here you know that under the section 39(2), when a company issue a share, that means the application money to be paid by the applicant should not be less than your 5% of your nominal value. Now what is a nominal value? Nominal value, it means that the face value. Okay, face value. So what is the face value? Face value denote the actual value which is apart from your discount and the premium. Face value denote your exact value, okay, without discounting and without adding premium on that. So here the nominal value is what? Is your face value, and is the original value of share as started in the companies in when started memorandum of association, isn't it? So student, here the application money is the amount. This application money is what? This is the amount which is paid by whom? It's paid by the investor, because he is investing in his money to purchase a share, to pay when they paying for the applying for the share. So this is what your application money, isn't it? Thus the minimum application money, when they called up at the time of issue of share, this application money should not be less than your 5% of the nominal value of share. So that's why what will the right answer for this question? The right answer will be option number C, isn't it? So yes, let's move toward. So yes, option number C is the right answer for this question, isn't it? Okay, let's move toward the next question. Before I'm going to be to the next question, okay, hi to everyone, all students. Okay, be attentive in the class and try the question, answer the questions. Okay, so before moving toward, I just quickly tell you about the global online. So here you will get a complete course of commerce and management. Our new batch has been started from this 1st of April. Okay, and here you will get daily live sessions, recorded session, complete syllabus notes in PDF format. Okay, here I'm completing our 100% syllabus over here. Along with that, I'm taking the revision of your full syllabus, but not with the unit. I'm just taking the revision with the help of PYQs. Okay, on the analyzing of this PYQs, I make the most expected MCQs, and this MCQs question has been seen in the most of the time in question paper. So yes, this is the way we have taking the revision, which help you to prepare a better in your examination and to crack in a better way. Okay, now the full syllabus mock test is available to you, 4000 MCQ series with detailed explanation, PYQs with detailed explanation. So here you will get, if you register over here, so here you will get, if you register for the paper, so this is the price, that is 8000 rupees. But this 8000 rupees is not only for the paper 2, it's also for the paper 1. That means if you register for the paper 2, paper 1 is free of cost for you as the same way. Okay, if you have any query, you can get in touch with this WhatsApp contact number which is given in your screen. Now how to download the global online? Just go to Google Play Store. Here you can see my demo sessions over here, so you can betterly understand what the strategy and what the way we are teaching over here. Now along with that, here you have to, if you want to register over here, you have to go to my course section and you can search the whatever the course do you want and you can register over here. Now this is a very systematic way. Here you will get a unit wise folder. So in this unit wise folder, recorded session is available, PDF notes is available, and the mock test is available. Unit wise mock test is given to you, so it's not for the paper 1, it's also for the paper 2. So it will help you to do better in examination, isn't it? So let's move toward the next question, that is your, this question is belongs to the match the pair, and this question I have put from the accounting section. Okay, so this is a common unit. Accounting is a common unit for the commerce and management. Now in the first list you can see there is a concept of accounting. Okay, the concepts of accounting, and in the list 2 here you can see what that concept is saying, what is the detail or what is the meaning of that concept. Okay, so the first one, that is a going concern. So going concern, you can relate this going concern, the company is assuming that the firm is going to be, that means inappropriate assumption of the firm undergoing the bankruptcy. So here you can see going concern, actually this is a concept. This assume that company will continue operating infinitely. That means the company is going on, okay, infinite periods. Okay, so however the firm is facing the bankruptcy, this is assumption become invalid. This is the meaning of that this particular statement. So this going concern you can easily match with the third one. So here the 2 option is going to be get cancelled. Now the consistency, what does it mean? The consistency principle say that we use this concept consistency principle to use the same accounting method. That means if you choose one accounting method for calculation of your accounting, so you have to continue this method for the longer period. That means you must be consistent in your accounting methods. So this is the way, this is a, you can easily match with the same accounting methods, yes, used by the firm from one period to another period. So this say that is a consistency. So here A is 3, B is 2, so here you can easily mark that is option number D will be the right. Now the next one, that is cost principle. What is meant? Cost principle is state that the assets are recorded in original cost. What is in original cost? That means actually what cost you are get to produce a particular thing, that original cost is you have to mention. Okay, so this is what, this is the cost principle. So these assets are recorded at the original cost rather than the current market price or current market value. So here you can easily match that the cost principle is a nominal basis used to account for the assets, isn't it? So you can match with the fourth one. Then materiality concept. So what is the materiality principle? Materiality principle is based on the size or the significance of an item is large through to influence the decision of the financial statement user. Actually materiality concept give the importance to the items, to the size. So you can easily mark the materiality concept, it's give the importance to the related, this concept is related to the relative size or the importance, isn't it? So you can easily mark this is materiality concept with the option number 2. Yes, so this, for this question option number D will be the right answer. If you are unable to answer it, if you are just in a learning stage, okay, so what you have to do, you just understand the concept and you just make clear. If you have any doubt you can ask me in this live session. Yes, okay, let's move toward the next question. That is, this is the way we are providing the detailed explanation for each and every question. Okay, now let's move toward the next one. That is, this is assertion and reason question is giving to you. So here you can see the assertion is the financial statement is prepared on historical cost. Yes, basis result into an erosion of the capital in the long run. Yes, so now the reason is given behind of that, that is maintaining the books of account as per the current purchasing power technique only may contain the inflationary pressure. Okay, so what do you think, what will the right answer for this question? As it said in the assertion, the financial statement is prepared on the historical basis, do not consider to effect of inflation. Actually the financial statement, if I take a financial statement or prepare the financial statement on the basis of historical cost basis, so that is actually not give the review of or do not consider effect of inflation, because inflation is about the future change in price. So over the time the real value of asset and the real value of capital get reorders due to the rising price. So that's why it's which can lead to understatement of the expenses and the overstatement of profit. So this erosion you can see if you are recorded all your financial transaction on the basis of historical data, because it's not actually show what are the actual expenses is done or going through from the going through by the company, okay, and over the statement of the profit, so the actually result in the capital erosion. Yes, now this the reason is given for that. The reason is the current purchasing power, that means C, this is your CPP, okay, current purchasing power techniques is used. We use this technique to adjust the value of financial statement which actually based on the inflation. So whenever we use a CPP, so this techniques helps to calculate the calculate on the basis of inflation. So by using the CPP, financial statement reflect the current value. Yes, and that will be help to countering and the impact of inflation or the pressure of inflation on preserving the capital value. So thus the your CPP technique can help to mitigate the inflationary pressure. Yes, so here you can see what will be the right answer. Yes, these are the both the assertion and reason are true, and that's why R is the correct explanation. Because if you see in the assertion, the financial statement is prepared the historical cost basis result to erosion of capital. Yes, because historical costs do not mention the inflation rate. Okay, inflation rate, so that's why you are unable to calculate, or you calculate the current value of the capital or the asset, and that's why it's a erosion, it's create a erosion of capital. And the reason behind of that, because maintaining the books of account as per the current purchasing power technique only can contain inflationary pressure. Yes, whenever we use CPP method, this method we use only and only to calculate the inflationary pressures. Okay, so this is a right answer for this question. The explanation is giving to you. Next, move toward the next question. That is this question I'm taking from the accounting, because most of the time they ask the question from this area. Now the what is question is, so there is three partners in the business, ABC partners, and they sharing their profit sharing ratio is 4:3:2. Now there is a new partner D is wanted to be a new partner in the firm. So in that condition, new profit sharing ratio will be 5:4:2:1. Now because D is contributed to the goodwill of rupees 36,000, this goodwill is allocated by the A, B, C, that means by the old partners. Which of the following will be the correct allocation? So first of all, how do you calculate your correct allocation? How they allocate the D's contributed goodwill? Okay, so here you have to calculate how much goodwill they are distributing. Okay, so that's why, so the way you calculate, first of all, what is our old sharing ratio? Our old sharing ratio is 4:3:2. So when I calculate, that means A, B and C. So here you can see A share is 4/9. Yes, B share is 3/9, and C share is 2/9. Okay, now what is the new profit sharing ratio when D is admitted? So the new profit sharing ratio for the is 5:4:2:1. Okay, so here you can see A's ratio is 5/12. Okay, B's ratio is 4/12, C's ratio is 2/12, and D's ratio is 1/12. So this is the way. Yes, now what you have to do, you want to calculate the sacrificing ratio. So how do we calculate the sacrificing ratio? So for calculating the sacrificing ratio, so formula for the sacrificing ratio, from the old ratio O ratio, you have to deduct your new ratio. So whatever the difference we will get, that difference, it's called as, either you can see the not writing O ratio, you can write here shares. Okay, shares. So what you will get, that the difference is called as sacrificing ratio. So you have to calculate the sacrificing ratio for the A, then B and C. So A's old sharing ratio is 4/9. Yes, here you can see this old sharing ratio is 4/9. This one is 4/9, and new is 5/12. Okay, so you have to less 5/12. Okay, then again for the B, this is 3 by 9 and you have to list 4 by 12, this one. Okay, 4 by 12, 4 by 12. For C, this is 2 by 9 and for C new ratio is 2 by 12. Okay, so 2 by 12. So when you solve this one, so what you get, you will get the ratio is 1 by 36. Okay, so sacrificing ratio for the A is 1 by 36. Sacrificing ratio for B is 0. That means he is nothing. That means when we calculate 4 1s are 4 3s are. Okay, just give me a second. Okay, 3s are. So when we solved it, let me check. Okay, so this is 1 by 3. So 3 3s are 9 minus 9 divided with 12. So 0 divided with 12, that means 0. Okay, so this is the way. Now this sacrificing ratio for the C will be 1 by 18. So here you can see that if they allocate the ratio or they allocate the goodwill, that means they distribute their goodwill in the sacrificing ratio. So that's why the total goodwill value is 36,000. Yes, so here I am writing the total goodwill value is 36,000. Yes, and you have to share with this sacrificing ratio. That means A's sacrificing ratio is 1 by 36. Okay, 1 by 36. Okay, B's sacrificing ratio is 0. C's sacrificing ratio is, okay, no, not like this. You have to give me just. So here you can see, you can calculate this like this. That means sacrificing ratio will be 1, okay, is to 0 is to 2. No. So here is sacrificing ratio is for A is 36,000 multiply with 1 by 36. Okay, and for the B it, and C 36,000 is multiplied 1 by 18. Okay, you will get multiplying C with the 2. Okay, numerator and denominator. So I will get 1 is to 0 is to, so here you can we get, how do we solve it, 0 and it 2 by, sacrificing ratio for the A B C will be 1 is to 0 is to 2. Then you have to distribute or allocate this. Okay, so the A share, okay, so the A share 36,000 is our goodwill value and A's sacrificing ratio is 1 by 13. Yes, isn't it? So when we solved it, we distribute A B C in the way 1 by 3, 0 and 2 by 3. This is the way. Okay, so then B allocate this share 36,000 multiply nothing, not 0. Okay, because sharing ratio is 0. Now C share will be 36,000 multiply with 2 by 3. So here you will get 12,000. Here you will get 24,000. Yes, so here is 36,000. Okay, so sacrificing ratio for this question will be 12,000 nil 24,000. So option number B will be 12,000 nil 24,000. So option number B will be the right answer. Okay, if you have any confusion you can ask me. Okay, can I move toward for the next question? you are clear with this question? If you have any queries, if you have any doubt, so let me ask. Okay, let's move toward the next question. Now the next question, this is solution is given to you. Now the next question is again from the assertion and reason. So here you can see the assertion is giving to you. So assertion is about the interest on borrowed fund can be capitalized up to the completion of fixed asset. Okay, so this statement is true or false. Now the reason is given behind of this. The completion of fixed asset has been possible only because of the borrowed fund. So here the interest on borrowed fund can be capitalized up to the completion of fixed asset. This is true statement, because this all the standard is given in the accounting standard 16. In the accounting standard 16 and in the accounting standard 23, there is a mention that interest on borrowed fund that are used for the acquisition, and this borrowed fund we use for acquisition of construction or the production of a qualifying asset, and this can be capitalized as a part of the cost of the asset until that asset is ready for its indeed use. So this is the interest on borrowed fund can be capitalized up to the completion of fixed asset. That means if you want to, for example, if you want to build your home, okay, so you take a loan from the bank and you loan for the P plus C, that means plot plus construction. So your plot or your house is kind of your fixed asset, and whatever the interest you are paying because of you are taking the loan, interest on the borrowed fund, okay, can be capitalized up to the completion of fixed asset. You can capitalize that until and unless you are not completed your home, you are not done with the construction. Okay, so this is true statement. And what are the reason is giving to you? The completion of fixed asset has been possible only because of the borrowed fund. So yes, this is also true. The completion of fixed asset has been possible only because of borrowed fund, and but actually this is not 100% true, but it is not a necessary condition. Okay, so when we are talking about the fixed asset can be completed through the various source of financing. There are the many sources, not just borrowing the fund. You can use your cash also. You can borrow from your relatives. Okay, so this is not the only thing that you have to take as a borrowed fund to complete or to get the financial asset, fixed asset. So yes, this is true, but does not correctly explain. So that's why what will be the right answer? So that's why right answer is both A and B is true, but not correctly explained. Okay, because because of this word is used, but only borrowing fund will help to get a fixed asset or to complete your fixed asset. This is not done. Okay, let's move toward the next question, that is your this is the two statement is giving to you. First one, that is the capital structure of a business refers to composition of long term funds. Statement number 2 is giving to you, it's include equity, shares capital, preference share capital, debenture, all debts and the reserve. So here you can see the first statement is talking about the capital structure of business refers to composition of long term funds. So yes, this is true, because capital structure is that fund which is companies needed for the long term use. Okay, so this long term fund used by the company as a finance. Okay, to complete the needs of the finance with the help of which include your equity share also, your preference share also, your debenture also, and your anyone, that is your long term debt. Okay, with the long term debt. So this capital structure of business refers to the composition for this will help to you for the long term funds. Okay, so yes, this is true, this is true. When we are talking about the working capital, so in that condition that is for the short term funds. Okay, now the second statement, it's include the equity share capital, it's also include the preference share, it's also get debenture also you can do. So yes, both these statements are true, but it's not only depend on the, you can say this is partially incorrect. Okay, because when we are talking about the capital structure, this includes all your long term funds. Yes, that actually include your equity, preference share, debenture, and also the long term debt. But there is another one is given to you, reserves. So when we are talking about the reserve, this reserve and your short term debts are the part of your working capital. Okay, and you know that this working capital, it's having the nature of short term, this carry the nature of short term. So that's why this is not include, the reserve is not include in your or debt also. Okay, all debt, because it's not all debt, long debt you can consider over here, but not a short term debt over here. So yes, this is partly true. So here you can choose your options correctly, that the first statement is correct, but statement number 2 is incorrect, because the reserve is a part of your working capital, for is a part of your short term debt, not where it's a long term, or either you can say it's not included in the capital structure. Yes, now let's move to the next question, that is a receipt of, this is a question is again from the accounting section, accounting unit. So here this is a basic question, really basic question. If your receipt of rupees 1,75,000 from customer, okay, but you have credited to this account to the 7,51,000, so this is a mistake, this is an error. But what kind of error we are considering, because the amount is different. Okay, so this is a kind of error, but what kind of error is error of omission, or isn't it an error of commission, is it an error of principal, or it is an error of compensation error? So what you will consider this error will be, so yes, this is the error of commission, because if you make any kind of mistake, this mistake is either be related to your incorrect records, incorrect amount records, or either be it's related to either supposed to be you have not credited, you had debited. So suppose it's wrong account, either you posted in the wrong account. Okay, either you posted in wrong account, okay, wrong side of account, either in debit side, credit side, in this way. Okay, so if you find this kind of, this is not omission, this is commission. Okay, if you find this kind of mistake, this kind of error in your entry, is it related to incorrect amount you feed, or is it related you incorrectly you are debited or credited? If you find this kind of mistake, this error is called as error of commission. Yes, so for this question, what will be the right answer? Option number B will be the right answer. Yes, now let's move toward the next one, that is what are the earning per share. This question is from the business finance unit. Okay, financial management. So this is a question from the financial management and the business finance. So what is the earning per share of the company that earn rupees 1 lakh last year, after the income tax payment of rupees 30,000, having 20,000 equity share and outstanding, okay, and the 50,000 retain earning at the end. So what is the question? So here what is giving to you? First of all, they give you the net profit, but this net profit amount is after deducting tax. That means net profit after tax. Okay, so what is the amount? The amount is 1 lakh rupees. So you have to write down whatever the information you have given in the question. So you just write down that so it will be easier to find out, okay, your solution. Now what is your outstanding equity share? So our outstanding equity share is rupees 20,000 is giving to you. Okay, now for this, the retained earning that retained by the company, this is your retained earning. So this retained earning is rupees 50,000, isn't it? So this is irrelevant if we want to calculate the earning per share, because if you want to calculate the earning per share, okay, so what we needed net profit, and we also needed the things of long term basis. Okay, so if you want to calculate the earning per share, what will be the formula? Net profit, whatever the net profit, divided with the number of outstanding shares. So here the net profit is 1 lakh, isn't it, divided with outstanding share, that is 20,000. So you will get earning per share is 5 rupees, isn't it? So the earning per share is rupees 5. So this is a way you can calculate your earning per share, because for your for calculation of earning per share, what we need just net profit and how much outstanding of share we have. So on the basis of that you can calculate earning per share, isn't it? Okay, now move toward the next question. This is right answer, this is the solution is given to you. Okay, now next question, that is, which of the following statements are correct with regards to issue of bonus share? Okay, so for issuing the bonus share, so what you have to what will be the correct statement if companies want to issue the bonus share? So first of all, to issuance of the bonus share is subject to the specific rule, that the specific rules is given in your accounting for issuing bonus share, and this because the bonus share you are giving from the company's reserve account. Okay, so that's why there are some rules is giving to you. First, that is, bonus share can be made out of general reserve. Isn't it true? Yes, whatever the company is having in his general reserve, from that they use this reserve to share or to issue the bonus share to his employee. So this is absolutely correct, because company often use his bonus share from the general reserve by capitalizing the part of their profit. So yes, the option number first, that is bonus share can be made out of the general reserve, this is absolutely true. Okay, now move toward the next statement. The bonus share can be made out of realized capital reserve account. Isn't it true? Yes, this is correct statement, because realized capital reserve are the profit from the sale of what? Sale of your fixed asset. Okay, sale of your from the fixed asset, or you can say whatever you are invested, if you sell your investment, so in that condition. Okay, so which can be used for issuing the bonus share. So yes, the bonus share can be made out of the realized capital reserve, and this realized capital reserve you will get when you issue or sell your fixed asset. Either you sell your company's investment. So with the help of that, you can company can issue the bonus share. Now the third statement is given to you: the bonus share can be used out of revaluation of reserve capital. No, this is wrong, because the reserve revaluation of reserve is not allowed to be used by using the bonus share, as it is. Why? Because this is unrealized gain, the gain which you are not actually received. You just imagine that this is that will be the realization value. So this is the profit. Okay, the bonus share, the company issued is bonus share when company gain a profit. Whatever the company's reserve, company gives a bonus share to his employee when the company's collected his profit from his reserve. So here the revaluation of the reserve, this is unrealistic concept. Okay, so actually this is unrealized gain and not distributed as a dividend, or either you can say as a bonus. Okay, so that's why this is wrong statement. Now the next one, that is bonus share can be issued out of the profit and loss account. That is, yes, if you are credited your profit and loss account, that means you are getting net profit. And if company gain a profit, so in that condition company issue his bonus share. Okay, so this is correct. The credit balance of profit and loss account, it's represent what? Your retained earning. What is your retained earning? So this retained earning company usually used for the issuing the bonus share. So here what will be the right answer? Option number 1, 2 and 4. So C will be the right answer. Yes, so here you can see the C will be right answer, and all the explanation is giving to you. Now move toward the next question, that is contingent businesses is shown in the of the balance sheet in accordance to. So as you know, what is the meaning of contingent liability? So actually contingent liability is means to the potential obligation that may, but it is depending on the future events, like suppose your like your pending lawsuits is there, some kind of guarantees is giving to you, is not actually a liability, but somehow if your this is show your pending future events, future liabilities. Okay, so there is an when we are talking about the doctrine of the disclosure, so disclosure represent or disclosure denote that all the material information you have to reflect in your accounting. That means material information affect the financial position of the company. So that's why you should have to, that company should have to disclose all the things in detail to his stakeholders. What this is doctrine of the disclosure. And since when we are talking about the contingent liabilities, it's not an actual liability. At the time of preparing the balance sheet, they are shown in the notes of account rather than the actual liability of ensuring the transparency. Okay, so actually the contingent liability is not shown in the balance sheet liability side. They write the contingent liability in the note to show their uncertainty. They show there is an to show the to ensure the transparency. So actually this is what, so this is a system, this is called as doctrine of the disclosure. Okay, so what right answer will be the option number B. Okay, now next question, according to Engel's law, as income increase, so what does it mean? first of all, if you are aware with the Engel's law, so you can mark this question. If you don't know, so it will be difficult for you. First of all, I'm reading just option over here, then I will tell you, I will explain you. Okay, so option is giving to you: the percentage spent on the food decreases, the percentage spent on the housing increases, the percentage spent on the categories other than the foods and housing increases, the percentage spent on saving remain unchanged. So here you can see, first of all, what is the Engel law. Actually, this Engel law is related to your households. It's households income. So this Engel law is applicable to the household income when it is increases or either it is decreases. So the proportion of income spent on food decreases even if the absolute amount you have spent on the food is increases. This is because of food is not a basic necessity, or either you can say no, it's actually the food is a basic necessity, and once the necessity or the essential needs are met, people allocate more of their additional income to other goods and services. So that's why the right answer will be the percentage of spend on food decreases. Okay, if your income increases, so in that condition the percentage of amount, whatever the percentage of amount you are spending on food, is going to be decreases. So here you can see there is an inverse relationship between the income and the food. So if your income is increases, your food necessity is going to be decreases. If your income is decreases, your craving for the foods, or you can say you're giving the importance to the food, that why foods, the percentage of spend in foods is increases. So this is called as your Engel law. Okay, Engel law is not related exactly to the housing, it's related to the households. Okay, households income. Okay, so yes, now the option number A is right over here. Now the next question is giving to you. The next question is, this question is from your economic portion. Okay, so the basic questions ask over here, that is assertion is giving to you and reason is giving to you. So when we are talking about the utility, total utility will be maximum when the marginal utility to prices of respective products are equal. So when I draw the diagram, you can easily correlate this. This is our total utility and this is our, sorry, so okay, so when your total utility in maximum level, so here you can see your marginal utility will be 0. Okay, so here the total utility is the maximum when your marginal utility to the price of respective products are equals. Okay, so here when we are talking about the total utility is needed maximized when the ratio of your marginal utility to price, okay, because this is your price section and this is your quantity. Okay, so the price is equals for all the product. So here which law we use? Here we use a law of marginal utility, because this represents the relationship between marginal utility. This show the relationship between the marginal utility is 1. In that condition P is 1. This is equals to your marginal utility to that is your price 2, and this is also equals to marginal utility 3. This is P3. So here you can see your marginal utility will be N and your price will be M. That means equal each and every unit you consume, you will get equal and same level of satisfaction when you are consuming every unit, okay, additional unit. So this is what your equimarginal utility. So when this condition is satisfied, consumer achieve maximum satisfaction. This maximum satisfaction is nothing but your total utility. This is your total utility, and from their spending, whatever they are spending. So yes, obviously option number, that means assertion, is right. Now what about the reason? So the reason is given behind that the deviation from this situation leads to reduction in maximum utility. So first of all, if the consumer deviate from this situation, they will no longer be maximize their utility. The marginal utility per rupee spent on one product is higher than the another. Increase their total utility by reallocation of the spending toward the product, and that with the higher marginal utility ratio. That is a point when your marginal utility ratio is reached to the maximum level, and thus any deviation is lead to reduction in the marginal utility. Okay, so here you can see your marginal utility is keeps going continuously towards the downward, but your total utility will be never be negative, but your marginal utility will be negative in after this some specific period of time. Okay, so that's why here the both the assertion and reason both are true. Okay, so what will be the right answer? Option number 1 will be the right answer for this question, students. Okay, so now the next question, a commodity is used for multiple purpose, then the demand for it is known. Again this question from the economics, so I'm just reading the options and then I will explain you question, and again I will explain you the concept behind of that. So here you can see the joint demand, option number 1, B composite demand, direct demand and autonomous demand. So here a commodity is used for multiple purpose. If one commodity is used for the multiple purpose, like I will give you the example of milk. Okay, you're using milk for making coffee. Also you can use meat to make making ghee. Also you can use this for buttermilk. You can also use a milk for paneer. Okay, for paneer also you use this to making curd. Okay, so milk having the property of multiple purpose. This commodity you can use as a multiple purpose. So here the demand is refers to this is called as your composite demand, because this means that good is demanded from the different uses. Okay, so here you can see the electricity. This is used for lighting, heating and operating the machinery. Along with that your milk. Okay, so you can use your milk to making curd, to making paneer, buttermilk, ghee and coffee. Okay, so these are we use cheese also. We make a cheese from the milk also. So this sense of demand comes from the various use. This is called as your composite demand. So option number B will be the right answer. Yes. Now move toward the next question, that is assertion is given to you. Again this question from the economic section. So here you can see the law of increasing return to scale is an indicator of economic of scale in production, and the assertion is given to you, economic of scale indicate falls in long run average cost. So here you can see, when we are talking about the law of increasing return to scale, do you know that what is law of return, law of increasing return to scale? It's actually refers to this. Okay, student, due to electricity cut off, there is some weather issue in my area in Nagpur. Okay, not in Nagpur. So, okay, which let's continue with our question. Okay, so what is it? So the question is, that is law of increasing return to scale. Okay, so what is the law of increasing return to scale? It's actually it's a situation where your output is increasing by an proportionately large amount than the increasing input. That means your output is increasing when I compare, it's proportionate to increase in input. Okay, so this is happened due to the economic of scale in the production, and this economic of scale of production is such as, this will helps to improve the efficiency, this will helps to better utilization of resources, and this is also happen due to the technological advancement. So when we are talking about the law of increasing return to scale, this indicate the economic of scale in the production. Yes, this is a true statement. Yes, because whatever your changes, the law of increasing return to scale is actually depend on your in what output you are getting and how much input you are um, you, uh, uh, taking to get an output. Okay, so this law of increasing return to scale, if it is because it is increasing return to scale, this is helpful to the economic of scale of production. So this is true statement. Now the reason behind us giving to the economic of scale is indicate the fall in long run average cost. So this is reason is also true, because here you can see, when we are talking about the economic of scale, this economic of scale is result of fall in long run average cost. That means your LRAC, as the firm produce more output, and this all has happened due to because of some factors, and this factor is what, when you are purchasing your raw material in a bulk quantity. So yes, if you purchase your raw material in bulk quantity, so obviously this will reduce your cost, this will reduce your, or either the lowest cost you will get, either if you use efficient machinery for your production, if you use a labor, a great efficient labor in your factory, so this is also increase your economic of scale. Okay, and the specialization and the division of labor is important. So that's why the economic of scale actually indicate fall in long run average cost, because with the use of economic of scale, we use or we purchase a bulk quantity of raw material, we use the efficient labor and the efficient either we can say efficient labor and what, yes, labor and machinery, isn't it? So yes, the both assertion is also true and the reason is also true. So yes, they are not exactly related with each other, but in the option you can see there is a no option, the kind of option is giving to you, that is assertion and reasoning or matching or not, but the both the statement are simply true. So that's why option number 2 will be the right answer for this question. Let's move toward the next question. Again, this question which I am taking from the economic unit of economics. Okay, so here you can see there is a demand, types of demand is giving to you. Now you have to match with the list number 2. When we are talking about the contraction of demand, so what is the contraction of demand? So I'm drawing this contraction of demand. So contraction of demand, that means when decrease in quantity demanded due to increase in price. That means when your quantity demanded, when your price is increases, suppose your price is here and we increase your price to 2, so your quantity demanded is also increases. So here you can see this is a contraction of demand. Okay, so the contraction of demand denote that if you make any small changes in your price, you can see a more effect and larger changes in the quantity. So that's why the contraction of demand denote that it give the importance to the price. So the price change effect we can see in the contraction of demand, isn't it? Now decrease in demand. So decrease in demand, that means you see your demand is decreases because of this is occur when the demand fall due to the factors other than the price. That means here you can see there is no changes in your price, but your demand is going to be changes. So this is your decrease in demand. So this decrease in demand, it's the effect, it's a kind of effect that which is not affected due to the price. It's affected due to the other factor. That means non-price effect you can see in the decrease in demand. When we are talking about the increase in demand, so in the increase in demand you can see that there is a shifting demand curve. Here you can see here your demand is increases. That means your price is constant, but your demand is increasing from Q to Q1. So here you can see the price is constant, but your demand is shifting, your demand curve is shifting. So this is you can match with the fourth one. When we are talking about the expansion of demand, so expansion of demand, you can see your demand curve remain constant. You can see will be no changes in your demand curve. That is your expansion of demand, and this expansion of demands actually denote the rise in quantity demanded due to decrease in price. Your quantity demanded is rising because you're decreasing your prices, and while the demand curve remain the same. Okay, so what will be the right answer? Option number A will be the right answer. So student, now we are ending over here. Okay, and the remaining question we will see in the next session. Okay, see ya.